Yesterday was a wild day in the financial markets, literally insane. Asset prices going down and then coming roaring back at the end of the day to end up actually being positive. What the hell is going on? The Federal Reserve is meeting today and tomorrow, and they are going to have a lot to talk about. Inflation is hitting 40-year highs, unemployment coming down. Everyone is worried about what the hell they're going to do with interest rates. And of course, we are heading into the midterm election season. So the Federal Reserve's got a lot to figure out. But just because they've been talking about raising interest rates, asset prices have been in a free fall. We've seen Bitcoin trade off 50%. We've seen stocks trade down significantly as well. But yesterday, right at the close of the market, asset prices had a little relief rally. I jokingly tweeted and said, well, that was a short bear market. I'm joking. Nobody knows what's going to happen in the future. But here you can see Bitcoin come raging back at the end of the day. On top of that, the last 2 months in the stock market has been real bad. But here's the Dow Jones Industrial. There we go, ladies and gentlemen. Right around 1 p.m., the plunge protection team coming into the market. And let's boost it up a little bit. Let's get back up to a little bit better pricing right before that Federal Reserve meeting. And then, of course, if we look at the S&P 500 and the Dow, what you can see is the exact same thing. Right around 1 o'clock, bam, let's get back to zero. Let's finish the day positive. Now, why the hell is all this volatility in markets happening? Well, there's a number of different things that are actually occurring. First is that the interest rate hikes could potentially be occurring. We need to know what the hell is going on with those interest rates. On top of that, the Fed will meet today and tomorrow to chart that monetary policy. Then there's been the earnings reports. There's been a mixed reaction. Some of them are good. Some of them are bad. Some consumer demand is persistent. Some of it is not. And then, of course, there's a bunch of earnings that are on the horizon. Apple, IBM, Intel, Microsoft. And then, of course, Joe Biden and the current administration, we're going to go to war with Russia. They're going to prevent them from invading Ukraine, right? I don't know, but World War III is literally trending on Twitter. I got no clue what's going on the geopolitical landscape. All I know is that when there is uncertainty, when there's doubt, when there is fear, when there is concern in the market, there is volatility. Prices and assets go up, they go down, they go sideways. Nobody knows what's going to happen. There's just massive freaking chaos. What do you guys think?
I think it's interesting because this isn't how Bitcoin moved previously, right? When you think about 2017, 2018 and things ratcheted up real quick price-wise and then went way down into a winner for a couple of years, it didn't move in tandem with the rest of the market, at least risk assets. And now what we're seeing is that it is moving in tandem with risk assets. It's having an impact from the Federal Reserve's decision. Stocks are selling off. Bitcoin is selling off in tandem. And I think what we're seeing is now there's much more institutional capital at play. This is a much more of an asset that is allocated from an institutional perspective. And I don't think we're ever going to see those 4-year bear markets again, to be honest. I think that this has become much more mainstream than people realize. And ultimately, it's going to start moving maybe more in line with traditional markets, right? There was just no reason previously as to why, sure, the halving and all these other things, but ultimately from a macro standpoint, there wasn't really a huge reason in the financial markets as to why Bitcoin did that before, and now it has a little more kind of common sense around it. And look, you can say everyone's like, hey, no one knows why this stuff is falling. It's very clear. It's a risk asset. It's being treated as such with institutional capital. They are selling to move into safer things with the expectation that the Fed is going to hike rates. Ultimately, that supply and demand imbalance is what drops the price. And what we're going to see is it's going to be a tug of war, right, with the Fed. What ends up happening? And to your point, like, do they want high inflation in an election year? No. Do they want the stock market to fall in the election year? No. They're in a very tough place because if they start hiking rates too fast and the stock market and Bitcoin and all these other assets continue to sell off, there's going to be a big problem. People are going to riot, right? Like everyone wants to see their 401ks go up. Everyone wants to see their savings account goes up. Everyone wants to see their bank account go up, right? And I think ultimately that's when kind of the euphoria is at its peak with the government. And ultimately, if they start raising rates too fast and too quickly, all of that's going to collapse. And what we're going to see is people get frustrated very quickly.
John, what do you think?
This shows to me that the Bitcoin market has matured over the last few years, right? In its correlation to stocks. The fact that everything roared on the second half of the day really just means that the Fed's decision, in my mind, was already priced into the markets. The people that move the markets are really the institutions that bring a lot of capital and can actually move the market versus just the average retail trader. So this is kind of expected a little bit. I don't think anyone expected the severity of the volatility yesterday, S&P going down 3%, Bitcoin drawing down as well. But everything ended up yesterday, right? So does it really matter? And look, if you have a long time horizon, I'll say this again and again, but if you have a long time horizon and you don't worry about these small intraday moves if you're not day trading the asset. So I think Bitcoin is becoming more mature as an asset, and I think we're going to see that going forward, and we're going to kind of break this cycle, I think, of the halving and bear and bull markets.
Well, I don't think to your point from the other day, like I don't think people are placing enough substance in the fact that politics matter in all of this, right? Like,
what do you mean?
President Biden doesn't want to have the stock market collapsing, right? That is not good for him. Inflation running hot is not good for him, right? He needs to get the economy in a better place. And although the Federal Reserve and his office are supposed to be completely separate, you know who his boss is, right? Jerome Powell's boss, right? Like ultimately, they're not separated. They may be from like a optical illusion standpoint, but ultimately they have a lot of influence on each other. So I think Joe Biden is going to look at this and say, "Hey, look, I don't want to hike rates too fast because then the stock market is going to crash. People are going to be upset. People were already coming out of a pandemic, right? And that's that they printed so much money that inflation ran so hot, and ultimately now they're in a really hard spot because they can't do either of those two without impacting the other, right? If they hike rates 50 basis points next meeting, the stock market's going to tank and people are going to be upset. If they don't do anything, then inflation is going to continue to run hot. The stock market will stay and Bitcoin will continue to rise. But ultimately, inflation, you can't keep it at 7% year over year.
It's a lose-lose situation, right?
Yeah.
I think that's what a lot of people aren't quite up to speed on.
That was a much more concise way to say what I was trying to say.
It's just literally you let inflation run hot. Everyone's freaking out, right? You go into midterm elections, you probably literally get your entire political party, everyone who's got a challenger, see you, you're out, you're fired, right? If you could actually step in and you get inflation down, but all of a sudden everyone's looking at their portfolio and they're like, holy shit, I'm literally losing money. I'm bleeding out assets. People are like, dude, get these people the hell out of here, right? And so it's a tightrope walk, I think is the right way to think about this, is you want to ease just enough. And ultimately, one of the things that may occur, again, we don't know what's going to happen in this Fed meeting this week, but one of the things they may do is they may talk tough, but not actually take action. And so therefore, the talking tough ends up bringing the markets down a little bit and trying to curb some of that inflation. But ultimately, they don't have to raise interest rates a ton in the first half of the year, which then crashes the stock market, sends us into a recession. Like the worst case scenario would actually be an over rotation back into a recession because you're trying to curb inflation, right? The only thing worse than high inflation is a recession. And so you got to be careful here of like, you almost have to choose between the lesser of two evils. And so running a little bit hotter, if you can get inflation down to maybe 4%, but you don't actually force a complete crash in the stock market, you don't force a complete recession, then like you may just say, hey, look, this is the best that we can do. Let's try to get that soft landing. Now, as we know, though, you're basically dealing with a complex machine with all these different inputs. You pull on one thing, pull on another. You don't necessarily know exactly what the intended impact is going to be. And so, I don't envy being in any of these people's positions. I don't envy being in the politician's position. I don't envy being in the central banker's position because I don't think that there's one single right answer. It's basically everyone's kind of trying to figure it out as they go. And so it's a tough job. And guess what? Us and everyone else is just going to rail against whatever decision they make anyways because we're like, this is stupid. It didn't have the intended impact, which, probably is unfair. But at the same time, that's how the world works.